Good day, everybody. Welcome to 2024. Happy New Year. I'm still in the last hours on 2023. I just wanted to go over the things that's transitioning. I think 2024 is going to be a huge year of transition for a lot of people. It's going to be a year of, there's the old term make or break. I think it's going to be survive and break, the way it's looking. Lots of negative things going on out there. I'm sure you already know. Don't need to turn into a diatribe on that. So right now, um, I'm trying to turn things and pumping out things to build solutions and build things for better results. I will say this year, sorry, 2023, my system that picks equity, stock, ETF has been very good. The timing has been very good thanks to the power of TradingView. Yeah, I'm still doing the struggling on the exit side, so I can easily automate that. It just really comes down to the management of your systems to keep them on and keep them running. There's that. So right now, this is about TradingView. Okay, so I've been on TradingView now for 6, 7 months. I've gotten two editor picks. I've had a like from the administrator from there is a admin account on TradingView. I'm assuming that's the founder, the CEO, whoever runs the whole thing, like one of my Microsoft ideas. So here's the thing: is that um, the way we're going right now with TradingView, it's very powerful. Obviously, I hit a major limitation if you want to do full-on automated trading. The good thing about 2023 is I've been able to defeat that and take all your orders from TradingView, automate them, and then get them queued up via from the signaling and the web alerts or alerts from TradingView, and then send them into Python listeners and be able to trade them out and do the automated. So that's been working fairly stably for the last 2 months, and it's been fairly stable. So I'm happy about that. Obviously, you can't run systems 24/7 because they conk out. Your internet may go out, conks out. So you have to constantly monitor this thing, but it does take away a lot of the stress. So it's been working really well. As I said with the exit, that's another story. So I'm going to bring in some techniques on that to automate the exits because I'm still kind of got that. Oh, I should exit now, and we had a pretty volatile year. So TradingView really helps in all of this. The research, all that. The one thing I want people to really understand, I paid now 210 or $217 for 13 months. Okay. And that's at the premium level. So I have full access to everything that TradingView offers for 200 and whatever dollars US. Name me another service that's going to give you a full year with the amount of discovery of ideas and source code you can get for trading uh, bots or indicator strategies or whatever with source code. Name me something that's going to give you that cheap of a rate. It's always on Black Friday. It's a big thing among the TradingView community, and they say millions. I'm saying there's probably hundreds of millions of people using TradingView now. So it's the number one platform out there for everything. So it's been very good to me. I've been a contributor on Seek and Alpha. Personally, I've done pretty good on Seek and Alpha, but that's another story with the editors. If you ever wanted to know, just reach out and I'll tell you. Seek and Alpha, it's still a good community. I think it's the best audience out there, even better than TradingView. It's just getting your articles up is the problem. Um, so there's that. So TradingView is just everything investing now for me. Outside of my other services that I use for APIs that I can't get with TradingView, there is still some, but for somebody who is non-technical, you want to be on TradingView. There's some excellent brokers and exchanges support there. I also have what I built for the automation. is for automation trading is only two places that I trust. Interactive brokers, which has a fairly low commission. And more that appeals to me is if I decide to get up and just travel, they support 200 countries worldwide. So I'm not, my account is not affected by that. You are with Robinhood, the crooks that they are. You can only trade, I don't know, you could physically be somewhere and trade in Robinhood, but you don't have UK and US. And I think they're working on Europe as well. So that's the big advantage with interactive brokers. The other big advantage I like about interactive brokers, if you have US holdings, they advertise 4.5%. And they've been around since the 80s. So they're as good as a bank. When there was Binance, I was excited with Binance because I thought, oh, that would be the next big bank. But well, here we are with where they're at. But TradingView is awesome. So here's the thing. I built out three courses. A very introductory course for TradingView. If you're new to it, you'll see all the power it brings. I've got another course that focuses on how to use PineScript. Doesn't teach you PineScript itself, but how to use the facilities of TradingView for PineScript and some techniques that I use that work pretty good. And then the third course is the most powerful. This is where you can get around the with automated trading using TradingView is using this third course, which shows you how to do that using the different types of alerts that TradingView offers and how to handle them and process them in Python and get your trades. Actually, you can use this for any exchange, anything really, as long as you have the API and the code. But it's coded up for both Kraken and interactive brokers out of the box. So that's what we got. You want it, $300. It's going to go up, well, pretty soon. So this is going to be the last call for it. Um, and I'm going to continue using TradingView. The future is simple. I've got two strategies right now. I've got other strategies I have in mind once I get past the redesign of my website. I may put up a separate video on that um, and focus on trading strategies that people can be invited into and be able to use those strategies no different than I use. One's an Ichimoku, another one's called a Bunny G, which is very good when you have momentum in the markets. That would have been an awesome strategy for November, December this year, 2023. So that there's still momentum in a lot of assets out there. Yeah, so that's TradingView. Okay, let's talk about 2024. Again, if you want this stuff, jump on it now. I'm down to the last couple of days. So where's 2024 going to go? Okay, so 2024, I think, as I said at the start, will be pretty well a make or break for people. 2022 was an absolute mess for everybody. A lot of people lost money. And there's people out there that brag they only lost 6% versus the 20% on average for most people. This year, 2023, was pretty good on paper, only because of the Magnificent Seven. I just put out a video on the disappointment on my YouTube channel, Quant Labs. Okay, so if you watch that half an hour, you'll see how weak the market really was. Okay, because here's the thing: I put it was about 40 plus sectors in the market. I can track 64 sectors in the market globally. Okay, um, all of them, majority of them, well, majority of them were down. The traditional ones you find in the stock market were down. Okay. Um, and there were some outperformers like agriculture, real estate. Obviously, the tech did extremely well. That was the best one. But when you start to see the ETFs, the bearish ETFs, the shorting ETFs, the inverting ETFs, when they start to show they outperformed S&P 500, or in my case, the benchmark was the QQQ. It goes to show how bad the year really fundamentally was. It was only the big tech or Magnificent Seven that carried and brought in these crazy returns. There's still some defensives out there, sectors that do well. Big thing I can tell you about trading generally, it's about knowing what moves optimally at max value and being able to time it. Because if you can't time it, you're going to lose money. Don't even bother guessing. All of this stuff on the quant, all of this stuff on the fun, whatever. It's all breaking down. You'll hear about quant hedge funds did well last year and did bad this year, vice versa. So there's no consistency there. So you cannot rely on one particular style of trading or investing. Doesn't work anymore. This next year, 2024, I think is going to be a very extreme volatile year. That's my take. How do I know? When you look at the performance of um, treasuries, like they're volatile. Why is that? It's because of the U.S. national debt. People are The credibility of the U.S. government is so bad. People, I mean, they're buying U.S. debt right now because the markets are doing well. Once that ends, we're back to where we were in March of 2023, and that's when you start to see things break. Big things break, banks break, and then the trust starts to come in, distrust starts to weigh in, and then you're gonna have another 2008. This is just on the financial front, let alone, as I said, otherwise. You got the wars, you got all social identity, all the chaos in that. So it's everything's all attacking at once. So my point is, if you're not watching this carefully, you will lose your money. If you're going into retirement, they like I've listened to a lot of videos on what economists are saying, what traders are saying, obviously via YouTube. What they worry about, the biggest sector that will be hit the hardest is either one of two. Either you're going into retirement or close to it, or you're retired, because those people are heavily relying on ETFs and the dividend income and whatever else. If you watch that video, if you watch that video I put out, you will clearly see in the dividend income sector, you're better off just to stick with the big tech, okay? Because the dividend income, they can cut that dividend income whenever they want. The only reason that dividend income exists, majority of the time, is for companies that are losing uh, relevancy. So, example, Exxon, they're gonna be more value based due to everybody wants no more oil. What are they going to do? Well, they'll go value and they're going to start issuing dividend. Many companies do that when they start to lose favor from their peak years. So that's fine. Here's the problem. Like one company, I can't remember the name, it was a REIT. And everybody joined that REIT for the dividend. And one of the things that people got slaughtered on with this was that they hold the principal in the stock to get the dividend. That that stock got pummeled by 50%. So those people that had money in this stock, and we're talking the retirement funds, a dividend income, we're getting slaughtered. This is what they're not telling you. If the markets do well, like November and December, and that continues, great, you're doing okay. But chances are, I just don't see that happening. So dividend income is not a really smart place to go. If you see that video I put out, you'll see agriculture did okay. As I said, real estate, and it's not in residential; it's in storage lockers. That's who's doing well, and it makes sense with the economy we're going into, and we are in. So there's REITs, real estate income trusts, that are focused on storage locker properties, and then let the operators operate the storage locker facilities. So that's just one clear example of fences that do well and other ones. There's one I saw that focuses on the warehousing. I mean, colossal amounts of warehousing throughout the LA County. They're everywhere, and nobody's in them, and they're being bought up on the cheap. Why? Because there's no, because of the virus. So they all get sold off for pennies on the dollar. So elites buying these things, and they know. The economy at some point will bounce back, and they're going to be the new grand landlords of these pile of warehouses as people move and want to use them for storage or whatever. So these are smart areas that you know that does well, but we don't hear about it. We don't hear about it on YouTube or Bloomberg and CNBC because they don't either know or they don't want to tell you. But I'm seeing it, and I talk about it in my community that I kind of have, and I've been tracking this for this year and last year, and there is money to be made. Well, last year, and other examples if you want. In Latin America, this is last year. There were companies that owned private airports. So people are flying privately. And there's somebody going to own those airports so that people can fly from one to the other. And there's a REIT built around that. And it made good money. There was right now, or in the last couple of weeks, there are developers that build out very exclusive properties in, I don't know, like Aspen as an example, or somewhere in Switzerland for the wealth, for the uber wealth. We're talking, the world go on fire and everyone's starving, but the wealthy, uber wealthy are doing very well. So it's being built for them. So there's companies that building those kind of properties for these people. They do well, and I see those kind of REITs. And there's a rhyme and a story for this. Okay, so my point is, it's this type of analysis that I'm pumping out where I can say yes, these sectors of ETFs do very well because of whatever the economy. So in the worst of the worst, there's still things going on. Now, here's a problem for a lot of people that don't want to hear this. There's a lot of YouTube chatter about gold and silver. Okay. Gold and silver, yes, is going up. Yes, you can buy into gold, silver, ETF miners, or whatever. With the economy the way they are, with the wars that are going on, why hasn't gold, silver, any of these precious metals performed at all? I will tell you when the war in Ukraine started, yeah, gold did spike. And yes, gold is at a high. Okay. But here you got to ask yourself, and a lot of people don't even know what this is. If you know what the word or phrase opportunity cost is, look that up. Basically, what you're doing is you're putting money into something that does okay. Meanwhile, you can put money into something else that can outperform. Great example Bitcoin in the last few months, since mid October. Everyone's putting a lot of money into Bitcoin. Okay, thinking, oh, we're going to have our 2021 thing. And they put a lot of money into Bitcoin. That's an opportunity cost. Why? Look at Solana. It did three times plus better over the same time period than Bitcoin. Why don't people put money in that? Check out Chainlink. There's another one. It's dropped off now, but it performed just as well. So people are missing out on all this. There's so many other ones. The Euro, Turkish lira, U.S. Turkish lira. It's crazy right now. People aren't seeing these things. So here's the thing. If you want to survive and thrive next year in 2024, which will be very, let me also mention this. We know AI is out there. It's like a bunch of sharks in the water. You want to jump in. You jump in, you know you're going to get bitten or even die. We're at that point now when it comes to AI. AI is going to negatively um, harm you, not just on your career, not your job, your career. It will take out negative force I've already mentioned about uncertainty of retirement savings, as an example. We are I've already entered into a race of no a race to the bottom, and I could go on about all the immigration and migration and stuff as well. So economically, a lot of people are suffering. Okay, in Canada, 2 million people are on food banks out of 40 million. That's 5% of the population. So like 45% of the Canadian population feel they're like one step away from financial ruin. So this is where we're going. And do you think it will get better? I hate to say it, no. But you gotta like have ways to adapt and build solutions. So that's what I'm doing right now. I'm gonna put out a video on my tech solution on my website. Watch that if you want. But I've already given you a bunch of examples on where to go uh, that do really well. Um, one more example I'll give you. In Texas, the state of Texas owns all the property to the state, the Texas State University, and there's lots of campuses, and they're vast. Some of those properties have oil exploration. Okay, so they have actual oil exploration on these properties, and the oil companies that do the development have to pay royalties to uh, these these colleges when they're developing property, develop oil on their properties. They have to pay out the royalties. So the thing is that that went from that I'll just say it mushroomed at least 4 or 5 times in a very short period of time in 2022, but nobody knew about it. Um, Another stock I saw called Ardmore Container Shipping that peaked 4 times. So again, that's why I'm able to find these. And it's a system that does it. So again, if you want to know about them, you got to reach out. Now, here's the thing. Um, what I'm planning to do for 2023, 2024 from the trading front is to work on, as I said, to automate my exits, which should improve things radically. And it's 100% automated. So what I'm planning to do is build out a community, okay, a private community. I'm gonna be leveraging Discord a lot this year because nobody wants a private forum, and it sucks. So you gotta be on Discord. That's where everyone is. So yeah, I'll have two levels in the Discord. Obviously, the public and the private, and I'll be a private community. So that's what I've been focusing on for the last while. And I have to, unfortunately for me, convenient for you, be on Discord. So with everything the way it's set up and way it's gonna be set up, this new website I'm working on is 100% mine, 100% in Python, and that means I can post stuff on it very easily. And it's a very slim website, very small footprint, we'll say. And I can put up anything I want on. There'll be two pieces on it at the high level. There'll be the blog, there'll be the community on Discord, and then there's going to be kind of like a school, a learning management system, as they call it. And it's going to be like a full-on school. I can take on students. I can develop courses, obviously that. So it'll be some of my courses will be transferred into that. Also, I have the capabilities of bringing in other people and bringing them in as professors. I guess that's what they entitle it, and do courses. 1 day webinars, could use whatever Zoom, Jitsi that's worked pretty good. It's free. Um, and yeah, I mean it's all out there. So that's the plan. And again, I'm gonna have a special starting. So I'll put them both in the description. So I already talked about the bundle for a TradingView. That's going to end fairly soon, $300. The new thing I'm working on, which is pretty well the whole that I've always run since day one, is the Quant Elite, and I'll be charging that offer 997 for 3 years. So it's $300 a year. There's no, I know times are tough and blah blah blah, but it's an offer if you can afford it. If you can't, you can't. Sorry, that's all I can provide for you. So that's going to be on for a while. It'll be like the new you, the new 2024 New Year's resolution kind of thing to start people off. So with the old site, you will still get access to everything I've got. I'll probably keep that in transition for at least 3 months, maybe 6 months. I don't know. It just depends upon the demand of this new site and how that goes. And if there's enough demand, not enough demand on the old stuff, I'll just turn off the old stuff and move everything in from the new to where everything's in place now. So that's what what I'm going to do over the next 3 to 6 months. So if you want that, jump on in and watch the next video if you are technical and want to know my experience with Django and all the fun website stuff I'm going to put out. Thanks for watching.